Corporations offer business owners significant tax advantages, but only if you know how to pay yourself correctly. Many S-Corp owners make costly mistakes that trigger IRS audits and penalties. Today, I'm breaking down exactly how to pay yourself from your S-Corporation while staying compliant and maximizing tax benefits. The primary advantage of an S-Corporation is the ability to split your income between salary and distributions. This can save you thousands in self-employment taxes, but there's a crucial rule you must follow. If you perform substantial services for your business, the IRS requires you to pay yourself a reasonable salary before taking any distributions. Why does this matter? Because the IRS closely monitors S-Corp owner compensation. When owners take large distributions while paying little or no salary, it raises immediate red flags. The IRS may reclassify those distributions as wages, resulting in back taxes, penalties, and potentially even the loss of your S-Corp status. Let's clarify the tax differences between salary and distributions. Your salary is subject to income tax plus Medicare and Social Security taxes, collectively known as FICA taxes. Distributions, however, are only subject to income tax, not payroll taxes. This difference creates the tax-saving opportunity that makes S-Corp attractive. So what exactly constitutes a reasonable salary? The IRS considers several factors: your role and responsibilities in the company, industry standards for similar positions, your business's profitability, your education and experience, and your time commitment. You can research comparable salaries using resources like the Bureau of Labor Statistics, Glassdoor, or industry associations. For example, if you're a marketing consultant running your S-Corp full-time, and the average salary for marketing consultants in your area is $100,000, paying yourself $20,000 while taking $80,000 in distributions would likely be considered unreasonable by the IRS. Once you've determined your reasonable salary, you need to properly process payroll. This means withholding federal income tax, Social Security, and Medicare taxes from each paycheck. You'll also need to pay the employer portion of these taxes and make regular tax deposits. S-Corp must file several payroll tax forms: Form 941 quarterly to report wages and taxes, Form 940 annually for unemployment taxes, and W-2 forms annually to report employee wages. Even if you're the only employee, these requirements still apply. Many S-Corp owners wonder if they can pay themselves as independent contractors using 1099 forms instead of W-2s. The answer is no. If you own and work for your S-Corp, you must be classified as an employee and receive a W-2. Using a 1099 for yourself is a common mistake that can trigger IRS scrutiny. Health insurance and retirement benefits require special attention for S-Corp owners. If you own more than 2% of the company, health insurance premiums paid by your S-Corp must be included in your W-2 income. However, you can then deduct these premiums on your personal tax return if you qualify. For retirement plans, S-Corp can establish 401k plans, SEP IRAs, or simple IRAs. Contributions must follow IRS limits and be properly documented through payroll. Here's a practical approach to paying yourself. First, establish a reasonable salary based on your role and industry standards. Set up a regular payroll schedule, whether weekly, bi-weekly, or monthly. Use payroll software or payroll service to ensure proper tax withholding and filing. Only after paying yourself a reasonable salary should you take distributions from remaining profits. Many S-Corp owners find that using payroll software or hiring a payroll service simplifies compliance. These tools automatically calculate withholdings, generate pay stubs, make tax deposits, and prepare required forms. The cost is generally worth the peace of mind and reduced risk of errors. Remember that the key to S-Corp tax benefits is balance. You must pay yourself a defensible, reasonable salary first. Then you can take advantage of tax-free distributions from remaining profits. Document your salary setting process and maintain clear records of all payments to yourself. If you're uncertain about your specific situation, consulting with a tax professional who specializes in small business taxation is always a wise investment. They can help you develop a compliant compensation strategy that maximizes your tax savings while minimizing your audit risk. By following these guidelines, you can enjoy the tax benefits of your S corporation while staying on the right side of IRS regulations.